Welcome back everyone. So today I'm going to be discussing whether or not investing in gold is a good opportunity. So I'll be providing my thoughts there, and as always I'll provide everyone with an update on my portfolio. Now within the last 10 episodes or so, I've provided sections within my videos, so feel free to skip to the areas that interest you the most. But to begin with, I'll provide everyone with an update on my portfolio, and then there's two news articles that I'm going to be focusing on. The first being the BP dividend cuts, which happened back on August the 4th, and we're also going to be looking at some of the concerns that Facebook has when it comes to iOS 14 and how this will impact their ad business. So as I mentioned last week, the account value is over the 10k mark. The value previously was around 10,300, and in the space of 4 days, the account value has shot up by an extra £300. Now I haven't added any additional funds. This is purely the growth of the underlying stocks. And what we've seen is a very bullish approach to a lot of the companies that I invest in. Now this growth may come as a surprise, especially considering a couple of weeks ago it was announced that the UK has officially entered recession. And so just taking a look at an article here, we have the economy shrinking by 20.4%. And of course this is related to the lockdown, so between April and June. And so the last recession we had was back in 2009. And so switching over to eToro, we can see that again there's an increase, so $22 given that eToro operates in dollars. So overall the market is trending upwards. All of the investments within eToro are US based, so the impacts of the UK are generally unrelated. With the likes of Trading 212, the majority of the companies that I invest in are again US based, so potentially this is why we're not seeing a massive decline. Now with the UK companies that I do hold, for instance Lloyds Banking Group, minus 16% there, no surprise given the issues that they've had. And then Derwent London, another high number, minus 10%. So out of the few UK companies that I do hold, they are some of the worst performing stocks. The only other two companies are Walgreen Boots and Wells Fargo, two US based companies that take positions 1 and 2 for the worst performing stocks. Now in saying that, we have other UK companies, take GlaxoSmithKline for instance, they're up 3.8%, and then just above that with Morrison's we've got an increase of 8.55%. So moving on to gold. So we can see the highest price of gold in recent times was $2,070, and the price has since dropped off. Now this very point on the graph here is the highest it's ever been. So when we talk about gold, we're talking about the physical commodity. And so there's different prices based on the weight. Now the price that we normally refer to and when we make a comparison is the gold price per ounce. But equally you can keep price of a different weight, so grams, kilograms. But this graph here, for instance, is just tracking price per ounce. And so I want to take a step back and just talk about how gold was used in the past. And so the perception of gold was that it served very well as a source of value. Now, prior to having any form of currencies like we do these days, in the past, people would use gold as a way of currency. So you can just think the physical gold was the currency that was used. Now, this was really important for merchants in the past, as it provided a standardization. And so imagine you are a merchant and you sell fruits, for instance. Now any food in general is going to go off, and so the goal there is to trade with other individuals. And so the level of wealth you have can be maintained by substituting what you've sold, i.e. the fruit, and then holding onto the currency, for instance gold. And it's no different to what we do these days, whether you work in say a service or you trade, and in return you're earning money in the form of the currency where you reside. And so going back to gold as the form of currency, this worked because gold itself is a limited resource. And so there's a finite amount of gold available on Earth. Now these days there are still miners that actively search for gold, similar to how an oil-based company will search for the limited resource of oil. But such companies that mine for gold are actually a really bad investment choice. And so you'll see certain companies listed on the likes of Trading 212 and they will pay out dividends. But what's happening these days is gold is becoming harder and harder to find. And so the labor costs are continually increasing. So keep in mind, if you see any of these mining-based companies that are paying decent looking dividends, then that type of investment, I would argue, is a lot more dangerous compared to just owning the physical gold or an ETF. Now, when we look at modern currencies, they are no longer connected to the amount of gold reserves that a country has. But even so, the likes of the IMF, they actually hold almost 1/5 of the world's supply, which is above ground, given that there's miners still searching for more gold below ground. Now, 1/5 of the world's supply is a vast amount, and these central banks have continued to add to their existing gold reserves. And so some could speculate that the long-term global economy could face problems, and that's simply because if central banks are holding more and more gold, then it would appear that they are more fearful of their underlying currency, and so they can always default to using gold as a safety mechanism should the economy struggle. And so with gold, we have this interesting situation where within the modern economy, gold is still important, given how historically wealth has been preserved using such an asset. And when we look at the likes of paper-denominated currencies, so pounds, dollars, euros, etc., those currencies have not been stable, and there's several reasons, but we can name the likes of quantitative easing, which is simply the printing of money. But to be clear, it's the unlimited amount of money that can be printed. And in addition, we've had a lot of switching between different currencies. And so when we think back to the creation of the euro, this replaced a range of European-based currencies. So the point I'm making here is that paper-denominated currencies haven't actually been around for that long. Even when we think about dollar or pound, these are well-known currencies, but when we consider the likes of gold, gold has historically been there. And so even to this day now, we have gold as this form of safe haven where we can substitute the currency that we receive into the form of gold, should we wish to. And so when we think about investing in gold, we have to understand how the price is determined. And so in short, the price of gold is a non-producing asset, which simply means that no matter how long I hold a piece of physical gold, it doesn't add any additional value. So if I compare with a producing type of asset, let's say I buy a piece of land, I have some chickens and they lay eggs for me, then those are producing something in addition to the underlying asset. And so with gold, the price is simply determined by the price that the next person sets. So depending on whether they plan on buying or selling gold, that's how the price is set. And so if we look back at the 1970s, when gold was around $30, if you were to convert that amount into gold, you would actually have more money than if you simply held onto the $30. And that's because the price of gold has increased over the years while the underlying dollar amount has actually reduced due to inflation on the cost of everyday items. Now, if you do live in a country where the paper currency is subject to high levels of inflation, then you can hold gold as a hedge. And in addition, if there's political and economic instability, then that can also increase the demand for gold and therefore appreciate the underlying asset. And for those not concerned with economic instability or rising inflation levels, then simply holding gold is seen as a form of diversification for your investment. And that's because there's no correlation to the likes of stock market movement, bonds for instance, or the likes of real estate. So it's a class in its own that you can hold within your portfolio. And so you're probably wondering, why is it that I don't actually hold any form of gold in my portfolio? And so as most people are aware, I focus on assets that generally produce something. So if I take a look at any of these companies, some more so than others, but let's say Home Depot. Now Home Depot is pretty much like B&Q in the UK, where individuals can pretty much make home improvements by themselves. And so this is a basic example of an investment that is producing something. But for me, going back to gold, at a simple level, the price of gold is just determined by the price that the next person decides to pay. With the likes of cryptocurrency, this is no different. Of course, we have a limited supply or a finite supply of bitcoins or whatever type of altcoin that you focus on, and it's actually no different from the physical form of gold. So right now, for me, the price of gold is an all-time high. So perhaps in the future, when the price starts to drop down, I may look to hold a certain percentage within my portfolio. To begin with, maybe that'll be 1 or 2%, and then I'll probably push up to say 5%. So moving on to news now, we have BP, which has actually cut their dividends for the first time in 10 years. Now, if we scroll down, we can see we have the actual dividend cut, which is 50%. Now, a lot of investors that back BP were expecting some form of a dividend cut, given the likes that Shell cut their dividends by 2/3. So a 50% cut by BP is not as bad as some people expected. And that may explain why the actual underlying stock increased by 6.7%. This was back in August the 4th when it was announced. Now for me personally, I stay away from the oil-based companies. I've said in the past that I do like the fact that BP is switching to lower carbon-based investments. And so BP announced that they're going to be cutting gas and oil production by 40% and increase their low carbon investments tenfold, so around 5 billion by the year 2030. So if you are a BP holder, this is the type of information that you should probably get more excited by. And so moving on to Facebook's concerns regarding iOS 14. So the concern is that iOS 14 is going to impact Facebook's ad business. But what's most interesting is that users will be able to control which data is used within each app. So this is including clipboard notifications and also the option to disable tracking between the apps. And so any type of change, big or small, that allows individuals to opt out of ads being shown, that's going to hinder Facebook's ability to monetize. Now, of course, we get this argument quite often when we have the likes of Facebook. Their advertising platform is crucial for the small businesses out there. And while that's true, mainly it impacts Facebook to earn money. If there's less relevant ads being shown, then there's less money that the ad providers are going to pay to the platform. And so it has a knock-on effect. And so my question for you all this week is, do you plan on buying gold? Let me know in the comment section below. And if you enjoyed the content of this video, then feel free to give the video a thumbs up. If you're new around here, then please do subscribe. It helps out the channel a lot. And with that said, I'll catch you in the next one.